Hello, everyone. Welcome back to the TQQQ Challenge channel. It's Sunday, May 18th, 2025, and I'm thrilled to have you here with me today. Let's dive into this month's update and take a close look at how our long-term investing journey is progressing. Since April 9th, 2025, we've seen a historic market comeback following a major announcement from President Trump, who paused most tariffs for 90 days. There's been a lot of movement and even more to unpack, so let's get right into it. As of today, TQQQ is trading at approximately $69, a significant jump from last month's level of $48. To put that into perspective, TQQQ hit an all-time high of $93 on December 16, 2024. It then dropped to $73 on January 13, 2025, before rebounding to $91 on February 18. However, the 2 months leading up to April 9th were nothing short of brutal. In response to Trump's aggressive tariff announcements, TQQQ plunged all the way down to $35 on April 7th. But once the 90-day tariff pause was announced, TQQQ made a full recovery, climbing back to $69. Even with this sharp rebound, market volatility remains elevated. Conditions are likely to stay turbulent until we get more clarity on trade policy. Since TQQQ is designed to track 3 times the daily performance of the QQQ, it's important to understand what's been happening with the Nasdaq 100 as well. Since our last update, we've experienced some of the most dramatic swings in the Nasdaq in recent memory. QQQ, which tracks the Nasdaq 100 index, has gone through a major roller coaster. For the first time since the Golden Cross formation in March 2023, QQQ fell below its 200-day simple moving average, the green line. Historically, this SMA 200 green line has acted as a strong support level during bull markets. Over the past 2 years, QQQ approached this line twice, once in October 2023, when it bounced right off, and again in August 2024, when it briefly touched and then rebounded. But this time, things look different. QQQ didn't just approach the 200-day line, it broke through it decisively. This kind of breakdown raises serious questions about what might come next. In early April, the Nasdaq officially entered bear market territory, falling more than 20% from its recent highs. To be specific, QQQ dropped from its all-time high of $540 on February 19, 2025, to a low of $402 on April 7, a staggering 25% decline in just over 6 weeks. At that time, I shared 3 historical scenarios that could help us understand what might unfold. The first was the 2018 market correction. The second was the COVID crash of March 2020. And the third was the broader bear market of 2020. Among these 3, QQQ seems to be mirroring the 2018 correction most closely. Let's revisit what happened in 2018. That correction lasted from October through December and was primarily driven by escalating trade tensions, as President Trump initiated a tariff war with China. During that stretch, QQQ fell by 25%, from $188 on October 1 to $142 on December 24. After Christmas, however, the market began a steady recovery. By April 2, 2019, QQQ had formed a golden cross. Back in 2018, QQQ made 2 failed attempts to reclaim the 200-day moving average, once in November and again in December, before a death cross occurred on December 3. About 45 days after that death cross, QQQ rose above the SMA 50 purple line and finally broke back above the 200-day SMA green line roughly 3 months later. The first attempt on February 6 failed, but QQQ succeeded on its second try later that month. Fast forward to 2025. On March 10, QQQ fell decisively below the SMA 200 green line, breaking the bullish trend that had been in place since early 2023. Again, we saw a 25% drop, identical to 2018. A death cross formed on April 11, 2025, mirroring the one on December 3, 2018. QQQ then easily rose above the SMA 50 purple line, just as it did in 2018, but initially failed to get back over the SMA 200 green line. However, QQQ eventually crossed above it on the second attempt, again, just like in 2018. If this historical pattern continues to hold, we may see a golden cross formation in the next few weeks or months. As of today, QQQ has rebounded to $521, just 4% below its all-time high. Now let's take a moment to review an article that summarizes this historic $8 trillion market comeback. In early April 2025, Wall Street was shaken by a severe sell-off as investors panicked over President Trump's erratic trade policies, particularly his imposition of extremely high tariffs on Chinese goods. The S&P 500 fell into correction territory in just 22 days, reflecting widespread fear of a global recession and a serious loss of confidence in U.S. economic leadership. This sell-off was marked by a rare simultaneous drop in both stocks and bonds, indicating a deeper crisis of trust in the administration's policy direction. The market chaos triggered a rapid policy reversal. Trump paused the reciprocal tariffs for 90 days and later reduced some tariffs on China, though they remain significantly higher than pre-Trump levels. That policy shift set off a powerful market rally. The S&P 500 not only erased its losses for the year but added nearly $8 trillion in market value from the April lows. The rally was led by tech giants like Apple and Nvidia, but gains spread across consumer discretionary, industrials, communication services, and financials. Each tariff rollback prompted economists to lower their recession forecasts. J.P. Morgan Chase and Goldman Sachs both cut their odds of a U.S. recession significantly. Still, risks remain. U.S. tariffs are historically high, averaging 17.8%, the highest since 1934. Tariffs on Chinese imports remain at 30%. While those rates are low enough to resume trade activity, they are expected to keep inflationary pressures high. Economists caution that the rally may be overextended, and uncertainty continues to loom large, especially given Trump's unpredictable trade policies. A sudden shift in direction could easily reignite market volatility. According to the latest GDP Now forecast, U.S. GDP growth for Q2 2025 is projected at 2.4%, a significant improvement from the -0.3% contraction in Q1. That's a promising sign for stock investors. However, consumer sentiment tells a different story. The latest U.S. Consumer Sentiment Index has dropped to 50.8, its second lowest reading on record. That's down from 52.2 last month and well below economists' expectation of 53.4. According to the CME FedWatch tool, the Federal Reserve is likely to cut interest rates twice, once in September and again in December. Meanwhile, over at Polymarket, a prediction platform, the odds of a U.S. recession in 2025 have fallen dramatically, from 66% on April 6 to 37% today. That's a big drop, though still significantly higher than the 22% probability seen in January and February. Now let's check in on my portfolio. Since the last update, I've continued buying more TQQQ shares. Several of my limit orders were filled. In total, I've added 47 shares this month. For shares at $42, limit order placed on April 21st, filled on April 21st. 10 shares at $49.67, limit order placed on April 24th, filled on April 24th. 10 shares at $50.83, limit order placed on April 24th, filled on April 24th. 10 shares at $50.88, limit order placed on April 24th, filled on April 24th. 10 shares at $53.77, limit order placed on April 25th, filled on April 25th. 3 shares at $53, limit order placed on April 25th, filled on April 27th. I've also placed 4 additional limit orders on April 9th that haven't been filled yet. For shares at $38. For shares at $37. For shares at $36. For shares at $35. My total holdings have increased from 278 to 325 shares. My average cost basis has dropped from $63.22 to $61.39. As of now, the value of my TQQQ portfolio is approximately $22,300, with a total unrealized gain of about $2,400, or 12%. For comparison, last month's return was negative 23%, with a paper loss of $4,100. So, it's fantastic to see this kind of turnaround. If you'd like more detail, check out my April 2025 update video. I haven't sold any shares and I don't plan to, unless I see unmistakable signals pointing to an imminent market crash. If you're curious about how to spot those signs, check out my videos titled 10-year minus 3-month spread, recession indicator, and how to predict the stock market. I plan to continue investing $1,000 per month, or $12,000 over the next year, as part of my ongoing commitment. The long-term strategy for the TQQQ challenge remains unchanged, to invest $360,000 over 30-plus years and aim for multi-million-dollar growth. If you want the full explanation behind this approach, make sure to watch my video called Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-Year Showdown. Also, I've just launched an exciting new investment simulation game on my website, tqqqchallenge.com. You can test out various strategies for TQQQ, SPY, QQQ, and QLD and see how they perform in different scenarios. Here are the guiding principles behind this journey. First, monthly investing, committing to consistently putting $1,000 into TQQQ each month. Second, enhanced dollar cost averaging, or EDCA, buying more during downturns and less during peaks. Third, sell before crashes, only exiting positions when major market crash signals emerge, with the plan to buy back at lower prices. And fourth, no margin, avoiding debt to remain financially secure and minimize risk. The market is moving fast, driven by rapid innovation and explosive growth in AI. But our mission is to stay focused, stay disciplined, and stay the course for the long game. Thank you so much for tuning in to this month's update. If you enjoyed the video, please like, subscribe, and hit that notification bell so you never miss an update. Your support truly brings energy and purpose to this challenge. Until next time, take care, stay focused, and happy investing.